Hey guys, this is an alert. Bitcoin Ben has confirmed the Road to Roota theory. Yes! Love the man. So Bitcoin Ben last night or yesterday did a live stream where he said we were talking about the repo and his guy at the St. Louis, is it St. Louis Fed or one of the Feds said, yeah, we are taking assets on our books. Absolutely. And I even gave Ben a free subscription to the private road. I don't know if he's watching it. But what his friend said, absolutely 100% is in line with the Road to Roota theory, the fact that these bailouts are happening, but they're not enough. It's not happening fast enough. He even gives a date, literally, that was 2 days off the Road to Roota date for the next hiccup. Anyway, let's listen to what Ben has to say, and I will comment on it. And I hate doing this, but if Ben and I agree, I love doing it. So I'm going to show him, definitely watch Ben's video. And we agree 100% on this. Well, 95%, and I'll explain the difference.
The St. Louis Federal Reserve. Now, my friend, Mr. Bix Weir, this morning put out a reply to my video yesterday. And he said that he does not think that the Federal Reserve is not flipping over the loans at night. Oh, no, he thinks they are. Now, if you check, and Walter, you got it, brother. JC, Walter JC, one ticket, my friend, you got it. All right, so my friend at the Federal Reserve gives me a little call today and says, hey, have you checked out our website in the last couple days? There's areas you may want to look. And he basically points me to the the St. Louis Fed, the bottom line, man, their books. Seems as if the St. Louis Federal Reserve and the Federal Reserve has accumulated $100 billion worth of something on their books.
Just to pause right here. Ben, yes, absolutely. It's over 100. It's 139 billion, actually. And on the Friday road trip, which you should have watched on the 27th, when I did a full report on this, on So Dark is the Con in the repo markets, I have actually charted out the all the repos going on. There's two kinds of repos. One repo is the overnight. That does turn every night. No, they're not taking assets on. There's a second repo, which is a 14-day repo. That's 2 weeks of repos that is held on the books. So the St. Louis Fed will show that. As a matter of fact, on the 26th, the number was $90 billion. On the 27th, the number was $139 billion. That is what the Fed St. Louis is recording on their books. It is not saving the repo market. The real. Let me continue with Ben's video, and then I'll tell you how Ben is exactly right, and his guy at the Fed is exactly right, except for one thing. Let's watch.
Translation: they bought $100 billion of something
for 14 days. Then it'll flip back. I'm just saying, 14 days. That's why Ben comes up with this date. It's because that's the end of the 14-day repos.
Now, it's my assertion from my friend in New York that the Federal Reserve has been buying derivatives.
True.
And other toxic assets from these banks and not receiving them as collateral on the overnights, but not returning all of the collateral.
And that is true from the Friday road trip chart. As you can see right here, these are the overnights. For example, on the 27th, they borrowed $22 billion overnight. The next day they pay it back. $55 billion, then they pay it back. The 14-day cumulative is the part Ben is talking about. They're keeping some on the books. And that ends on I believe it's October 11th. Let's keep going. This is confirming through his guy at the Fed that the road to Ruta theory is actually absolutely correct. Check out what else he says.
They have been allowing the banks to pay a portion back and then accepting partial collateral payment. They're bailing out the banks slowly. Basically, what my friend at the St. Louis Federal Reserve told me. And it's not going to stop, my friends. It is not going to stop at all.
I agree again with Ben. Ben and I are on the same page. But when is the next change they have to make? They have to make the next change when these 14-day repos, because they stopped last week or last Friday, they stopped doing it and they haven't announced any more. But when do these expire? And all of a sudden, the total cumulative, I think right now it's about 180 billion. I update this chart. I'll have it up for the private road members today, along with other stuff. But yes, it is right around the 10th or 11th is when this ends. And so they either keep bailing out on the overnights because they have to pay all these back, Ben. They got to pay them all back. They got to give all the derivatives back, and the banks got to give the money back. Unless they do things behind the scenes, which if they were going to do things behind the scenes that they don't tell anybody about in this area, they would have never talked about it. You would have never heard about it. It happens all the time behind the scenes. There's a reason it's coming out now. So there will be a decision day, and that decision will probably be some kind of permanent type of 100, 200, 300, 500, 700 billion dollar bailout for the banks. I believe it will have to go to Congress at some point. Now, I'm hoping it goes to Congress early, right after the 10th or 11th. It could drag on to November even. But the bailouts, absolutely, they have to happen. This is not getting rid of the problem. You got to understand, it's a $2 trillion or $2 quadrillion derivative problem. This is nothing. If they bailed out, I did the math, if they bailed out $100 billion a day, like Ben is saying, $100 billion a day, if they did do that, and these are cumulative, so they're not, it's on the books as $100 billion, but if they did that every day, it would take 80 years to get rid of the derivative problem. 80 years. We would be dead. Our kids probably would be dead as well. And their kids and grandkids would have to deal with this bullshit that we're having to deal with. It's the same problem they stuck us with 110 years ago. And the derivative bubble was not meant to be fixed. And nobody, not Ben, not Ben's best contacts, can ever tell me how we're going to get rid of the derivative problem. There's only one way to get rid of it. It's to destroy the system. That's the only way. At the end of the day, everybody comes back around to the road to Ruta. As Ben is leaning more and more, he further talks about the coming crash. Check it out.
In fact,
look how good looking he is.
The word at the St. Louis Federal Reserve is all hell is going to break loose on October 15th.
Look at that. Right after the repos. Absolutely. Yes. The Fed knows.
Between October 10th and October 15th.
They must be on the road to Ruta. I know they are on the road to Ruta.
Is going to break loose on the stock market and other places. Now.
So, yeah, Bitcoin Ben is all on 100% on the road to Ruta. And I gave him, I'm going to have to contact him and find out if I gave him the private road membership. I thought I gave him a 10-year private road membership for fun. Apparently he's not watching. So yes, absolutely. That's going to be a decision time. Now they could say, okay, we're going to do 30-day cumulative and things like that. But again, it gets back to, does the Fed want this system to go on, or do they want to destroy the old system and start something new? I'm of the opinion they want to destroy the old system, start something new, because it's the only way. And this is the key question for Ben's guys. Ben, ask all your guys, ask the Fed, ask everybody. This is the key question for everybody in the world. I get how we're going to transition either to gold, silver, or cryptos, or a combination of all of them. I get we got to change things. What I don't get, and nobody has been able to explain it to me other than one explanation, is that how do you get rid of a $2 quadrillion toxic derivative problem and move forward? You can't bail them out through the repos. Like I said, if they did 100 billion a day, and these aren't days, I mean, this has been going on for 2 weeks now, and the Fed has only accumulated $100 billion worth of toxic assets. When we know that JP Morgan added 11 trillion in the first quarter of derivatives. So it's not any kind of derivative bailout. That is my question. If we don't have a derivative meltdown, how do you solve the problem of derivatives? Anybody on planet Earth, please let me know. All you guys with the smooth transition, let me know what happens to the derivatives and when. If it's backed as included, explain it to me. What happens to the derivatives? $2 quadrillion. $2 quadrillion worth of derivatives. They go poof, everything goes poof. Everybody agrees on that. It is a weapon of mass financial destruction. You cannot add cryptos to the weapon of mass financial destruction and pretend it's not there, because it will destroy the cryptos as well. If in that scenario, if you integrate and intertwine derivatives into cryptos, which they are now at the exchanges and at Bakkt, which is a derivative exchange, let's get this completely out on the open. Bakkt is a derivative exchange. They trade futures. That's a derivative. Yes, they're settled. Why not just do the real thing? Have an exchange without any futures. You want to buy cryptos? Go to Bakkt and they'll send it to you on chain to your wallet, because it's not the plan. The plan is to inject the fraud and market manipulation into the cryptos. And that happens in the derivative market. So nobody on planet Earth to this day has explained to me how we're going to get rid of this $2 quadrillion problem. It's not going to be soaked up by the Fed. They can only do 100 billion in 2 weeks when Jamie Dimon adds 11 trillion in the first quarter. And that's just Jamie. The derivative bubble is growing and growing at exponential times the amount that the Fed is, quote, bailing out. And they're not bailing out. These are just, as of October 10th, that 100 billion will be gone from the Fed St. Louis balance sheet. It'll be gone. You start fresh again. So no, there's no secret bailout going on other than these overnight things that are happening. And yes, they have to be turned back in at the end of the quarter or into the 14-day. And overnights are happening already. Even if it wasn't, even if there was some secret bailout that Ben's talking about, it would take 80 years to close up the $2 quadrillion derivative market. And 99.9, now these are just, these things that are being put up for collateral are mainly U.S. Treasuries and mortgage-backed securities. Let's not talk about all the other stuff. And they're generic, meaning they all have the same contract terms. So that's because that's the only way you can do this, because those are exchange traded. What about the other half of the derivatives that are completely unique? Completely unique. Nothing like a unique contract was written. On the 19th of November, 2019, I will pay you 27 ounces of gold for your 56 million tons of copper, and then that will be swapped on the 18th with a silver contract that is traded on the LBMA, but we'll take that's the type of integration that some of these contracts have. They are so convoluted, they can't be saved. You just got to wait until the end and then settle up. And if you don't settle up, you have third-party risk, and the third-party risk is what the problem is, the contagion. The third-party risk is bang, 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 bang. The weakest link doesn't pay up, and then it goes and goes and goes and goes and goes. It was designed this way. It is the only way to get these criminal bankers out of the system, this criminal, corrupt system. So, thank you, Ben. Thank you, Ben, you good-looking man. Let's take another look at how cute he is. Let's get a better one. I like when he smiles.
We're going to have to go a little deep into this one.
Oh, cool. Let's go deep.
Because after I got done talking with my St. Louis Federal Reserve friend here, and he basically told me we're all going to hell in a handbasket, hence the wine, because if we're going to hell in a handbasket, we might as well be sitting in there with a good buzz. Y'all know what I mean.
I love. Look at the glass of wine he pours. It's like a monster glass. I love it. He doesn't live in California, where you gotta fill it halfway up to the thickest part of the wine glass so it breathes. Although he's drinking like muscat or something like that, which is grape juice with alcohol in it. Ben, we gotta get him out to California. Anyway, as you can see, they did a little saving of the stock market today. It was diving, and all of a sudden, ooh, can't have that. Completely under control. So I just want to say thank you, Ben. And anybody who wants to join the private road, you got to get the inside scoop. And I'm going to make sure that Ben has his private road subscription up and going. The total bailout right now is at $139, not the overnight, but the 14-day cumulative. But it's October 10th, just like Ben's friend said. Oh, all shit's going to fall apart. Absolutely. And that's because that's decision time for the Fed. And then at some point after that, there will be decision time for us. And decision time for us is when the Treasury and the Fed come to the U.S. Congress. Just like Hank Paulson did in October of 2008. And they come and they say, we need a bailout instantly or the entire system's going to fall apart. And they're going to say, we need $20 trillion. And that's our moment. That is the defining moment on planet Earth for us to stand up and say, no, it ain't going to happen.
Well, you start with Bitcoin and you know nothing. You make your first wallet, then you think you got some. Secure your private keys. If you don't, all your coins will be gone. Now you're a coiner and it's time to learn all. From banking tech to social net, cryptos are hard. But you gotta get your feet wet, gotta get your mind set for change. And it's the way of the crypto warriors. We're changing our world day by day. Way of the crypto warriors, can't rely on the bankers, no way. Way of the crypto warriors, after all the crazy politics fade away, you got something to say. Live a crypto warrior way. There's Kenny Bozak, he'll show up in your town. No fiat in his pocket, always dressed like a clown. But he pulls out his phone, always pays for what he owes in crypto. Big old John Kim erases all Charlie's doom. Satoshi lies feeling right with John in chat rooms. And he takes care of Litecoin, we know it's the right one for change. It's the way of the crypto warriors, changing our world day by day. The way of the crypto warriors, can't rely on the bankers, no way. The way of the crypto warriors, after all the crazy politics fade away, you got something to say. Live the crypto warrior way. Well, let me tell you about my friend. His name is Bitcoin Ben. A truck driving man, everybody loves him. And he's spreading the word, he shares what he heard, secret plan. And there's Snippy by Joe, can't miss the J-Snip show. From Psychic Fest to Treasure Chest, no Joe's on the know. And he teaches us tech, cause he's seen a few wrecks, so go slow. It's the way of the crypto warriors, changing our world day by day. The way of the crypto warriors, can't rely on the bankers, no way. The way of the crypto warriors, after all the crazy politics fade away, you got something to say. Live the crypto warrior way. Cause everybody wants to be a hero. Everybody has dreams of a better day. But if everybody knew we could change everything that we do, then everybody live a crypto warrior way. And everybody live a crypto warrior way. And you can live a crypto warrior way.